Right, folks, welcome back and to our penultimate finish for the conference, our industry leadership panel. And let me just introduce some of the panel who you haven't had a chance to meet. On my far right, Mark Guppy with us from Allianz. Welcome to you.
Thank you.
Chris Black, of course, well known from FMG and President of the Insurance Council of New Zealand. Kevin Hughes from IAG, where he is EGM for Consumer Business, and of course Ralph Ronenberg from Munich Re, who you met earlier. Can I ask you to welcome our panel for this afternoon? I have to say we wouldn't win any prizes for gender today, so that we won't. We sort of carefully avoid that topic for kicking off. But I wondered if we can perhaps start off from each of you with perhaps just a top of mind thought from what you've been thinking about as a result of today, or what you are thinking about at the moment, you know, in your industry space. Chris, could we perhaps start off with
thanks
you?
for the opportunity to go first. I think for me there's it's been very interesting today in terms of the theme around thinking differently. I think it's also really important to think deeply. So there are a lot of patterns and trends and that may or may not be true. And so I think one needs to really be clear about what one's trying to do in terms of choices. And so if you look at the value chain, for example, a lot of people say the value chain is going to change completely, but I don't think it will, is my personal view. But I think the elements of the value chain will be elongated. So there'll be subcomponents of the value chain in each part of the value chain. And so it'll be really important to decide strategically where you want to be in those components of the value chain. So I think that's an important strategic decision. And it'll just get tougher because the value chain is getting longer. And where you don't want to compete, because you don't want to have a core competency in it, you need to partner up with those 3 AM friends that someone referred to today. So, because you can't be good at everything, you just want to be good at one or two things. So the question is, what are those? Where are those on the value chain? And then pick your friends carefully, because those partnerships built on good brands and trust will be really important.
Mark.
Andrew, there was a lot in this morning's conversations around Incitec and that sort of thing, so I'm probably equally excited and equally petrified about the pace of change and that sort of thing. You know, for someone coming maybe towards the end of my career, it's and having seen a lot of change, it's been an interesting ride, but for a parent with children in the industry, you know, what's ahead of them is going to be really fascinating, I think. So, you know, as long as we keep that customer centricity and, you know, get closer to the customer and that sort of thing, provide what they need, and, you know, the takeaway I've had about less friction is a good one. You know, we need to have that in what we provide, and then the second half of the day on the resilience piece and that sort of thing, we've all got a big part to play in that from the insurance industry and that sort of thing. And you know, it's amazing what you know, local councils are doing and that sort of thing. It has to happen as well. For us to stay in the market, for us to survive. So a really fascinating day.
I can't remember which presentation it was, but it was one to words to the effect of, you know, we've always had to deal with change. It's about the pace of change now that defines this particular period in business. What's your sense about the industry's, you know, maintaining that speed of change, that speed line that was used at the start?
We've got to get better. We've got to embrace change and make it happen quicker. We're a bit fuddy-duddy sometimes. You know, we've got all these wonderful things happening with labs and that sort of thing that weren't even thought of 10 years ago. So we need to embrace that, and we need to make it a reality too, not just talk about it. That's really important to make sure that the industry going forward is really credible and that really supportive industry that I know that it is. You know, it's like a mouse around a wheel at the moment. It started off really slow 35 years ago. I tell you what's going like that now. So, you know, it'd be kind of nice to get off the train at some stage. But you know, I'm really looking forward to how the industry is going to shape this, and it's going to play its part, no doubt.
Kevin, your thoughts?
Yeah, thanks. Actually, rather embarrassing, this is actually my first ICNZ conference, so I've certainly enjoyed every moment of it. And I really take my hat off to Tim and the team for the agenda today. I think it's incredibly relevant, and that would be my real reflection point. If you think about the issues we're dealing with, and really focused on everything that's covered today is absolutely front and centre all the issues we have. So I think the speed issue is really important. I think the partnership has been talked about a lot, and Chris mentioned that as well. We won't be able to do this on our own. We will have to partner with people. You've seen some examples of that today. And I think the other thing about it, how do you actually, the classic sort of analogy, how do you fly the plane while you're trying to change it at the same time? And that's the challenge that we're all having, I think, and that's been brought through today.
I liked Andrew's presentation earlier when you bring people from the outside with relevant experience in disruptive innovation and driving that force. Is that something that the sector and the industry needs to think more about? How it brings outsiders in with that kind of expertise to think from a disruptive mindset?
Yeah, I think that's absolutely true. I mean, I've been in insurance for just over 6 years, and when I first started, I was like challenging all the norms and those sort of things. Within 6 years, I'm already talking like an underwriter and an insurance guy, already, and it's sort of like, where does that innovation and different thinking come in? I mean, obviously, Andrew is obviously part of the IAG group, so we're really finding we have to actually bring that capability in, because actually we are so focused on actually what we have to deliver today, we haven't actually got enough space to actually focus on that, so we need to bring separate areas in who can just focus on that as well. We call it like leading and fueling, right? So we're fueling the business, but other people have got to lead it.
It's interesting, I think. One of the things I was reflecting on today was the word "and." So while one has to make choices, I think there's quite a lot of "and" in our industry in terms of, someone had the phrase today of corporate innovation. Was that an oxymoron? And I don't think it is. I think, like a big organisation like IAG is very interesting, and your colleague that spoke about the innovation lab. So that's really big and really small sort of coming together. So you're trying to blend those two. There were 3 different types of leaders referred to today. But I see leaders that have all those attributes of, the traditional, the entrepreneurial, and the visionary. I see people like that. There was a comment about being agile and robust at the same time. So I think the "and" is, there's a lot of blend going on, I think, so, which I think is a really good thing. And so if you're in the middle, it's quite interesting. So an organisation like ours, FMG, we're a medium-sized company. And so if you're a really big company, it's challenging to change. It's more challenging to change because of your size. If you're a startup and you're really small, you're nimble and agile, and that 90-10 where you've got 90% of failures and 1 success. Whereas if you're big, you really want 90% successes and 1 failure to back up the 1 failure. I thought it was really interesting in terms of, if you're in the middle, can you do both? Actually, is corporate innovation different for medium-sized companies?
I've always been interested in Spark, particularly as a case study, because they started with digital ventures as a way of really disrupting themselves internally, and then used that to drive a cultural shift between the wider organisation. And I wonder if that, and then there's the potential that you create something as a spin-off, that can be made, so that but it takes a reframing of that paradigm to think, is that something that's being readily embraced, do you think? Are you ready to make that shift, I guess, is the question.
Ralph, what do you think?
I'm still trying to see what my reflections of the day would be. And sorry, I'm just taking a step back there. And I guess thanks, Tim, for the program. It's a great program with a lot of diverse perspectives. So it takes some time to think. Immediate reflections for me would be on Alistair's presentation, and I guess that's certainly not happy news. And I guess for us as an industry, it's pretty alarming, because there's a big threat of protectionism. There is a tendency that we're seeing worldwide, and our industry relies on global trade. We are a global industry, and if we don't have that, that's a big problem for us. Secondly, around resilience, and I guess talking about climate change, that's a topic that's very close to Munich Re as well. And I was quite amazed to see that the first time that we actually mentioned climate change was in the mid-70s. So that has a long history with our company, and we're doing a lot of publicity. When you talk about pricing, and I understand that certainly that's when the rubber hits the road, it's when do you find climate change being embedded in the pricing. One has to understand the insurance industry, we price on an annual basis. So we have the opportunity to reprice on an annual basis. If we had to price on a 30-year basis, like people are locking in when they buy a home, or the banks when they finance a mortgage, they are in for 30 years. We are not. So I'm surprised that whilst we're talking about it, we see very little action from those who are actually on the hook. Thirdly, change and innovation. Probably there, one of my worries is attracting talent into the industry. And I think as we don't really manage to have a great consumer experience, it's also difficult to attract talent in the industry. Although it's a great industry, and I'm saying that full of passion, because it does two things. It's a very technical and it's core analytical, yet it's still a people's business. We sell a promise, and a promise has to have a face. So therefore, it has to do with people. And that combination is quite unique. I'm not sure if we manage to get that across and sell that really, but we have to realize we are in competition with other industry, because that's a set of talent that's rare to find. So if I would say, what would be my ideal leader of tomorrow, I would say it's the charismatic, eloquent, numbers nerd. No? So, and that's a combination you practically don't find. Then said, what can you do to create that, or what can you do to make sure that you're changing as an organization? Unfortunately, have to come to the word of diversity, although I realize we are not really giving a good example how diverse the industry is. But I guess it's just a reflection of the truth. And that's a big, big thing we have to work on. Again, two reasons. Diversity, that means if we are not a reflection of the demographics in the population, that means there must be barriers along the way. Barriers mean we don't tap into the full potential that the workforce has out there. So we are limiting ourselves somewhere along the system. And secondly, diversity is important because of diversity of opinion. And there was a theme earlier this morning, it's about challenging assumptions, and that's exactly true. We always tend to see the world through our eyes. And for us, it's perfectly normal that we always sell annual policies. But why the hell? Who, as a consumer, needs annual policies? Because that the asset that you're protecting, you just don't sit on only for a year, you have it long term. So why? That's very much an insurance perspective, because it's always been, because we have annual reporting rhythms. So that's an insurance perspective. And to change that and look at us through the eyes of a consumer, that's important. And I think diversity of thinking helps that to get the agility to look at things from different perspectives. So I'm worried about attracting talent to the industry.
Okay. Good point. We'll come back to that. Just reflecting on Alistair's presentation, New Zealand is a small nation with limited influence. Mm-hmm. Is it just a matter of wait to see what happens and follow the pack, or are there areas that New Zealand can or should be taking a lead?
Well, yeah.
Well, I think historically New Zealand, I think Mike mentioned it before, New Zealand's always punched above its weight globally and been innovators, you know. You think about gender diversity, think about the suffragette movement and those sort of things. We've always done things because they're the right things to do, and we hope the rest of the world will follow, so I don't see why we should be doing anything different.
All right, sorry, Chris, you want to...
No, I was just going to say, I think definitely yes. If you look at Kaikoura, for example, we've done an outstanding job, I think, in recovering from Kaikoura. We've got the first anniversary next week. That has been a real collective team effort across the industry and more broadly. But that old saying, you know, a stitch in time saves nine, I think is absolutely right. And the commentary about Wellington today, you know, are we doing enough around, you know, building resilience and the prevention side? You know, I could see a time where, you know, each property has a star rating where you have your 10 natural perils in New Zealand. And if you're really exposed on a peril, you've got a 5-star rating on that. And so what that means is you've got a 50-star rating on your property, you want to be really careful about buying that. And it's going to be very expensive to insure if you can. Mm-hmm. And so I think that transparency would be, you know, quite helpful. It does need central government, it does need local government, but I think, you know, we need to start thinking about, you know, natural peril risk in a different way, with a burning platform, actually.
That's a good idea. I mean, is that being considered or being canvassed?
No, I don't think so. But I think to the point that's been made, and you know, if you go to the United Nations or somewhere, you need 5,000 people in a room to try to figure anything out, and it's very difficult. You know, some of the great work around microinsurance, is tremendous. If you go to, one of the things with New Zealand is we have such high insurance rates. So we're the second most insured country in the world after Holland. Part of that's because of EQC and ACC. But if you go to places like Colombia or Kenya or Indonesia, their insurance rate is 2%. So their protection gap is 98%. So in New Zealand, we are really well placed. And so we probably only need, 50 to 100 people to really, have a guiding coalition and make some serious progress on that.
So I want to just pick up on a couple of specific issues, and obviously one of the other big themes from today has been around technology and where that's going to drive the industry. So a question from the feed, the focus on expense ratios coupled with potential impact of robotic process automation indicates staff levels will fall significantly in the future. What's the industry doing to prepare people for this? Silence. Silence is definitely. Obviously not a lot at the moment.
Well, I think everyone talks about we're in the fourth industrial revolution, and everyone says the first three it changed the nature of work, but it didn't reduce the number of jobs. So, there's different arguments at the moment globally about whether this one is going to be the different one or whether this is just going to change the nature of the work. So, I think I haven't actually got an opinion on that. Whether this way, my worry is that we are at the stage where the robotics will become so sophisticated that actually it will reduce and what is the nature of work in the future, and therefore what are we preparing people for. I think education and there's quite a deep level of conversation needs to go on about what are we teaching people. I think creativity, it's come through a bit today, creativity would be such a fundamental part of what's the future about, as opposed to the ability to actually do things and move information from this place to this place. No one will be doing that in the future. So I think the nature of education and what people are actually doing, I think is going to be fundamentally changed over the next 10 years. We are doing quite a bit of work with our teams around capability build and changing the nature of even the type of people we're recruiting to meet that. But again, I think we're still not clear what that future is going to look like.
Anyone else want to add to that?
We're embracing some of that, Andrew, along the lines of freeing up our staff to be better decision makers and to have that client contact, and getting rid of a lot of those rudimentary processes that can be better automated. And that's certainly going to be the first phase. And we're adaptable as a workforce, and particularly in insurance. So those resources will be adapted into other areas that maybe are more market-facing, more client-centric. But we will be a smaller industry perhaps going forward, but not a lot smaller.
So I have a different view on that. I think this word, language is powerful. This word disruption, one could look at it the other way. It's actually just very enabling for clients, and customers. And so, to your earlier point, this interface with clients around the information we have and the advice that we can provide on that, is a great opportunity that we probably haven't had up until now. So, to your point, I can see that people will shift, from one area to another. But we've had. The telephone was hugely disruptive, but we've still got people working on telephones, and so I just see it as this new technology is enabling, and also it will just add to the mix and make those jobs that can be done robotically. Actually, just do those robotically and free people up to do other things. And if the industry's growing, that's fine, because there'll be good opportunities for everybody.
So just on that point, how are you benchmarking yourself? Because it's very easy for, I guess, these issues to just, continue to happen around us. But how do you assess your performance, year to year, beyond the financial metrics in terms of your, how you're progressing down this pipeline that's driving you into a more technologically focused, innovative driven, creative organisation? What sort of metrics are you using to kind of define your success in those areas?
Usually my management's given me less expense to work with every year, and at budgeting time it's always, last year less 5%. So we're all well aware of the fact that we've got to do more with less. That's a fact of life these days, but it's an interesting one. It's about redeploying your assets and that sort of thing. The cautionary part of all that process for me is that how we got into the industry all those years ago, and how my children might get into the industry. A lot of those jobs are going to disappear. So where's their entry points now, and how are we going to sell ourselves as a preferred industry?
I think the thing obviously to look at is historically, as an insurance company, you would have benchmarked yourself against other insurance companies. We'd have been quite narrow around that.
Yep.
And the reality is our customers are telling us that they benchmark us against Amazon and Google and
Uber
Air New Zealand and
yeah.
everyone else. So that's the new. You've got to benchmark yourself against what customers expect, which is changing rapidly, and that's raising the benchmark, which is great because it's great for customers, and that's making us actually work harder to broaden out what we're doing. And the same thing applies to staff engagement as well, right? So again, our employees and cultural point of view, they're expecting different things than people were a few years ago. And everyone talks about millennials, for example. They've got different expectations, and therefore you've got to benchmark yourself against what they might get at other places. As Ralph said, the competitive market for talent.
Well, I guess the ultimate test is the share price for those who have stock listed, I think. Just let me try to take a different position here. I'm not sure, particularly if we're exploring innovation and disruptive elements, if we should follow our usual pattern, and that is set a long-term plan, define benchmarks, key metrics, KPIs, and then track that, because then you're falling into the same track, which actually prevented a lot of that. I think you just have to just try things without being clear from the outset which directions it's going to take, and not try to push yourselves and optimize to a certain benchmark. I think you just have to create some freedom, again, within certain boundaries, but within that, I'm not sure if I would try to, let's say, come up with an innovation KPI that you have to have this many ideas progressed or this many pitches, because then you're just doing the opposite thing of what you should be doing in that space.
I think also, no, that's a very interesting comment. Just to add to that, I think it is really important to have a strategic plan, but for that to be flexible enough. And the other thing is actually you can't do everything at once. Bill Gates, he often says about this dynamic where people really overestimate the amount of change that will happen in the next 2 years, but really underestimate the amount of change that will happen in the next 10 years. And so, having a sort of 3 horizon type approach is quite liberating, really, because you can't do everything, but it's important to make those choices about horizon 1, 2, and 3.
Okay, next question. Just coming up, just a little freeze on the machine. It's always when the technology drops at the appropriate time. Particularly, one other thing is just in terms of well, here it is. Actually, just got my screen back. Are the big incumbents worried about the impact to their bottom line with more transparency around fees and the use of technology? I mean, is that blockchain and so forth? If that's all, I was talking to somebody earlier, says blockchain's about to be eclipsed by even more progressive technology. Hard to keep up at the moment, but is there transparency issues going to perhaps rear their head potentially in that space?
I think again, some mentioned before, we've just got to embrace new technology. The question is, what is the right technology to embrace? So some of it's going to be great, and some of it's not going to be so great. So I think Chris mentioned before. So are you got the right partners? And is it going to be the great things for customers? That's the main thing we've got to worry about. Not all of these new things will be, and I think that's going to make sure it's actually the right thing for our customers.
Okay. Do you expect parts of New Zealand to be uninsurable in the future?
That's one for you, probably.
That's a tough call. However, I think one needs to understand, again, it depends on international capital markets very much. No? The preparedness of the international capital markets to back this risk up. This, first and foremost, has to do with the price that the capital can return that is being deployed. But I don't want to boil it down to price only. I think then we can link it back to the question of resilience and disaster mitigation, because it's not only about price. Price is just one means of risk management. That's when you then transfer the risk. But it's broader, it's risk management. So I think it takes a more holistic view and not only look at the capital, but also what can you do along the way to mitigate the risk and to work with the risk and apply different forms of risk management techniques rather than just transfer. So I think it leads a more holistic approach. If that is being adopted, certainly. And the price is right, certainly.
Yeah, I think that some places will be uninsurable. In fact, I'm sure, all insurers in the room, they have places they won't insure. And that's a tough one when people are already living there, or there's already businesses there. But, if we look at the new planning, and again at a local and central government, we're still seeing subdivisions built on really dodgy land. And there's a whole range of dynamics in behind that. But I think, yeah, there will be places, just like there are, people and organisations that actually aren't insurable. I think to the point about the community rating system, though, and that's really important, I think, in terms of, the New Zealand environment, and this, EQC is a good example where it has a community rating. And so I think it's important for us as an industry and a country to have some community rating concept. Otherwise, we'll leave people behind, and it will be very divisive at a society level, and we don't want that. So.
I think the challenge is going to be moving forward as different players may come into the market, is they may obviously select with the challenge in the community environment is they'll just go where you haven't actually spread your reinsurance risk. So the competitive tension is quite hard, especially for some of the people who have been around, more sort of bigger players from the market point of view. I think it was mentioned, Ralph mentioned this before in the earlier panel. Reality is the government will have to step up at some stage and be quite clear around what their role is in this, because even we've seen with Edgecombe and other things, the government does sometimes end up as the insurer of last resort anyway. So how do they get in the front of this solution as opposed to being the taxpayer picks up the bill at the end of it, sort of thing. So there's definitely, we've got areas that we currently won't insure. There's no price that we can cut, because it's not about whether it might happen, it's just a matter of when it's going to happen, and that's the reality. So
you wouldn't want to get to a place like the west coast of the United States, where only 25% of people have earthquake insurance. An earthquake's a big risk here in New Zealand. So, to your point, actually, the government picked up, a $17 billion tab for Canterbury. So they were the insurer of last resort. So there needs to be a mechanism that we can make sure people are well covered for, an earthquake, which is completely unpredictable. But there are some things that we are doing that just don't make sense. And I think that will change over time.
Yeah, I think as an industry we're a much better place now to have a look at specific perils and that sort of thing. If you buy a house next to a river that floods every 5 years, it's going to be a problem getting flood insurance. It's just a fact of life. So peril-specific exclusions and that sort of thing are here to stay. We've got that information now where 20 years ago we probably didn't have it.
All right, we're pretty well right on time, so I'm going to wrap it at this point. We've managed to get through all the questions on the feed as well too. Oh, there's one more just come in here. There we are. So we'll give you one more just as the takeaway question. Actually, I'll tell you what. It's quite a long question. I might actually. Discretion is the better part of valor, I think, in that case. So on that point, and I know everybody's hanging up for their beers as well too. So can I ask you please to thank Chris Black, Mark Uppy, Kevin Hughes, and Ralph Ronenberg for that.